Hello, and welcome to another episode of Virtual Legality. I'm your host, Richard Hoeg, managing member of the Hoeg Law business law firm of Northville, Michigan. And about a month ago, I made a video in Virtual Legality discussing the possibility that the Sony Corporation might purchase the Kadokawa Corporation, itself the makers of the Elden Ring franchise and Souls video games, through their subsidiary From Software. At the time of that video, I mentioned that I didn't think the math made a lot of sense for an outright acquisition because Sony didn't have that much cash on hand, and Kadokawa Corporation would likely be more expensive than Sony could afford to purchase. Nevertheless, reports happened at that time and since then that discussed that Sony had issued a letter of intent to Kadokawa Corporation, and that letter of intent indicated that they intended to buy the company. That's what a letter of intent means. Nevertheless, as I said in that video and on social media, a letter of intent just expresses the intent to buy something. It doesn't mean that that purchase is going to take place. Much like you can say to your neighbor that you intend to buy their car, but that doesn't mean you bought their car, especially if in that letter of intent, you say that you intend to buy their car for $10 or $20. Now, we don't know what Sony offered to Kadokawa Corporation for the entirety of their company, but we do know that that acquisition did not happen. And that's the update that we have today. In fact, in a press release issued jointly by Kadokawa and Sony, we have a lot more information about what this relationship is going to be. The press release is entitled Kadokawa and Sony Agree to Form Strategic Capital and Business Alliance. Now, that word strategic is very important. It's different from financial. It should be read as the opposite of financial when we talk about investments and purchases. If you were to go and buy stock in the stock market today, you would be doing so for financial reasons. You don't have a strategic reason to necessarily own Tesla stock or to own stock in IBM or something else that you might favor. It's that you think that the value of the company on the whole will go up and that you will make money on a financial basis from holding the interests in that company for some period of time. By comparison, a strategic relationship is one in which a company has some kind of operational benefit that they can gain from their partner in the context of a strategic investment. So here, what we should read this headline to mean is that Sony is going to invest certain amounts of money in Kadokawa, and we'll see how much in just a second. And in respect of that investment, they're not only going to receive shares, but they're likely going to enter into what we would generally call a strategic partnership agreement that would outline some level of coordination between these parties in order to benefit both. Or as the subheadlines here says, further strengthening collaboration to maximize both companies' IP value globally, which sounds like it was written by committee, which it undoubtedly was, in a boardroom somewhere to really speak to investors and the business class more than the average individual reading these things. But overall, what it means is not only are we buying shares in this company, but we are also entering into some kind of agreement to benefit both parties that will result in certain amounts of exclusivity and special treatment for us at Sony or at Kadokawa in order to benefit both corporations. So let's read the press release. Tokyo, Japan, Kadokawa Corporation and Sony Group Corporation today signed a strategic capital and business alliance agreement. And we'll see that phrase a bunch, which signifies to us that that is the name of the agreement that they've actually signed, a strategic capital and business alliance agreement, which again, from the business and lawyer side of things says strategic capital means we're putting money into the corporation. Sony is giving Kadokawa money. And business alliance means that together with the word strategic, we're entering into some kind of deal to do things with one another. With the acquisition of the new shares, Sony will become Kadokawa's largest shareholder, holding approximately 10% of its shares, including the shares Sony previously acquired in February of 2021. So looking at this again on the whole, we know that Sony is not the acquirer of Kadokawa. They aren't buying 100% of their shares, but nor are they buying 50% plus one share, or if you prefer, 51% of the shares to give them control of the Kadokawa Corporation. Sony will not have control of this entity when this is done, but these two entities will have entered into some kind of agreement to coordinate their intellectual property in some way. What way? Well, we can see it a little bit in the next paragraph. Kadokawa and Sony historically have collaborated on various projects, and through this capital and business alliance, intend to further strengthen our collaboration to maximize both companies' IP value globally and facilitate wider and deeper collaboration. So this isn't getting married. They aren't acquiring Kadokawa, but they are going out on dates. They're going out now. They're going steady maybe. In the future, the two companies plan to discuss specific initiatives for collaboration. So this signifies to us that whatever deal they've entered into right now, it is, as the lawyers might say, an agreement to agree. Something will happen in the future. We will agree to do something at some timeline that we aren't saying right now because the parties don't have that fully booked right this second. They plan to discuss. What do they plan to discuss? Initiatives to adapt Kadokawa's IP into live action films and TV dramas globally. That's the first thing. And this is the kind of provision that we saw referenced in Sony's deal to purchase Bungie. That Bungie was entering into an independent relationship with Sony, which is maybe not as independent as they would have hoped, as we've seen in the last little while, but on its basis that Bungie could take its intellectual property, Destiny, anything else that it makes in the future, Marathon, and Sony would make movies or TV shows out of it because Sony is already set up to do so. This is the same kind of provision with respect to Kadokawa. Whatever Kadokawa owns, whether it's Elden Ring, whether it's something else that they might want to turn into a live action film or TV drama, Sony can help get that done. And so if we are imagining what the strategic agreement might look like, it's not just Sony putting money into Kadokawa, but probably also agreeing to give Kadokawa space to make things through the Sony Pictures kind of envelope, co-produce anime works, expand global distribution of Kadokawa's anime works through the Sony group. So to help distribution, there's some kind of deal that Sony probably gets a beneficial relationship in some way for Kadokawa's anime distribution rights, further expand publishing of Kadokawa's games, and develop human resources to promote and expand virtual production. So as you can see here, even though we don't have the specifics, we have a broad understanding that Kadokawa intends to make certain live action things out of its intellectual property and to make more anime with Sony's resources and to distribute that anime through the Sony group, while Sony will also help to publish Kadokawa's games, presumably getting some kind of beneficial arrangement from that publishing and also through the sale of their hardware if they are perhaps the exclusive publishers of some of the games that From Software or any of other Kadokawa's legion of developers might otherwise have. But Kadokawa has a deep bench of video game developers as well as anime and manga producers, and Sony is essentially getting a closer relationship with Kadokawa in order to help itself. Now, they also have some comments here in the press release from both companies. First, Kadokawa Corporation, who says they're pleased to conclude this capital and business alliance agreement with Sony. This alliance is expected to not only further strengthen our IP creation capabilities, but also increase our IP media mix options with Sony's support for global expansion, allowing us to deliver our IP to more users around the world. So Kadokawa is looking at this and saying, well, Sony's got a big studio enterprise. They've got a lot of distribution networks around the world. We maybe don't have those resources ourselves. So we get money from Sony, and also we get access to Sony's network infrastructure in order to get our properties out to more people and hopefully increase the value of our company. By comparison, Sony says, through this capital and business alliance, we will become the largest shareholder of Kadokawa, which consistently creates a wide variety of IP, including publications and books, such as light novels and comics, as well as games and anime. Now, that first sentence is really a kind of financial approach to this particular alliance or investment, which is to say, look, it's never a bad idea to invest money in people that are successful in making more of it. And Sony says, all right, we have 10% of this company that makes these smash hits like Elden Ring, and so that's a good thing for us. By combining Kadokawa's extensive IP and IP creation ecosystem with the strengths of Sony, which has promoted the global expansion of a wide range of entertainment, including anime and games, we plan to work closely together to realize Kadokawa's global media mix strategy, aimed at maximizing the value of its IP and Sony's long-term vision, creative entertainment vision, which is to say to have Sony owning or having the rights to transmedia properties that can go across their movies and television and video games and anything else that they want to make, including anime. And so you can see how this could make sense for both parties. You can also see how Sony only purchasing 10% of its shares is something quite different from buying the whole company outright, which reads to me as a business lawyer as Kadokawa essentially fending off Sony's acquisition, and that Sony's acquisition offer, in whatever that letter of intent said, was lower than Kadokawa Corporation was willing to sell for. Or if we're doing the math at home, we can see that 50 billion yen for this 10% interest is equal to about 317 million US dollars, 10% of the company being worth a full company of 3.1 or so billion dollars. Now, that's a little bit lower than the numbers we had talked about in our earlier video, but it's important to remember that 10% of the company is not control of the company. So everything we talked about in our prior video about a control premium doesn't apply here, because Sony, while being a big time investor in the company, by being the biggest investor in the company as of this particular deal, and by entering into some kind of strategic arrangement with the company that is otherwise going to give them exclusive or preferential treatment to Kadokawa properties, all of that is important. It isn't buying the company outright, so it isn't as expensive as we otherwise would have thought. And to Sony, only spending $317 million for this relationship probably seems like a bargain. Now, it's also important to note, Sony issued another statement to their own investors at the same time that this announcement was made, and that went a little bit like this. Sony Group Corporation today announced that it has signed a strategic capital and business alliance agreement with Kadokawa Corporation for the purpose of acquiring 12,054,100 new Kadokawa shares. For details, please see the attached press release. We don't need to do that. We just read it. Following Sony's initial proposal in October 2024 of its intention to acquire Kadokawa shares, Sony has reached an agreement on this capital and business alliance after discussions with Kadokawa. So said another way, letter of intent goes out. Sony says, we're willing to buy your company. Kadokawa says, no, that's not the right price. We'd be willing to sell the company for this, or we'd be willing to enter into a strategic partnership like this. They talk about it for a little while, and then Sony and Kadokawa ultimately agree on this arrangement. At this time, Sony does not plan to acquire additional Kadokawa shares after the execution of the acquisition. Now, I will note that a number of people have gone out there already and said, note the at this time, they do not plan to acquire additional Kadokawa shares right this second. And that's fair enough. You have to be honest in these kinds of statements to your investors when you're a public corporation like Sony, but there's no reason to believe that this particular kind of relationship where you get a 10% interest and not a 45% interest or something much, much higher is going to lead to an acquisition. It could. Certainly, Sony has in the past had these kind of dating relationships with other companies and then decided ultimately to seal the deal by marrying them and acquiring that company. But in this particular case, there's no reason to believe that right this minute. Also noteworthy is this last line in the statement that says this capital and business alliance is not anticipated to have a material impact on Sony's consolidated financial results for this current fiscal year, the one ending March 31st, 2025. And all that means right this second is that whatever arrangement they've made with Kadokawa, whether it's for exclusives, whether it's for preferential treatment in studios or anime access or whatever it might be, it's not going to make a material difference to their bottom line, their cash in the door in this present year. So that could mean that the exclusives or whatever other rights or benefits Sony has acquired as part of this deal are for a future year. Certainly there's nothing imminent coming out from Software or any of the other companies at Kadokawa right this minute. Or it could mean that ultimately this relationship is still an agreement to agree. We haven't really decided what the ultimate contours are, but that Kadokawa wanted us to invest money in them because they need cash, and we don't know what their cash situation is for whatever they have stewing in the background. Or that Kadokawa wants to have an arrangement with Sony because they want Sony to have skin in the game with whatever it is that they are doing, so that Sony is incentivized to further invest or otherwise protect them from other potential acquirers in the future. We don't know, and there are a lot of people that have rumors out there on the internet at this point in time, but there are a lot of reasons why this could happen where Sony is telling its investors that this is unlikely to have a financial impact on their bottom line in the immediate near term. But all that is to say, when I asked the question, will Sony become the Elden Lord in that video about a month ago, the answer to that, as of right now, is no. From Software, the other companies under the Kadokawa Corporation umbrella are all quote-unquote safe as it stands right this second. They might have entered into some kind of exclusivity arrangement with Sony in the future, but anything that would have been seriously material, Sony would have still had to announce now, even if the baseline revenue that they would receive would be in the future because of accounting principles. So it's unlikely, in my estimation, that Sony and Kadokawa have really entered into something that will give Sony full control over exclusives, Elden Ring, otherwise, at the Kadokawa Corporation. But there are going to be a lot of reports that you see online that suggest that Sony has bought more than they actually did here. So if you like these conversations, if you find them informative, please do check out our Play or our Patreon, links in the description of this video, or otherwise just subscribing, liking the channel, telling your friends that these conversations are happening somewhere on YouTube or social media in general is very helpful to the channel, and I think very helpful to the quote-unquote discourse, because it's important that more folks understand how these stories go so that we have a little bit less of the console wars, flameouts all over social media, and a better understanding of what's actually happening in the world today. Which is all I really wanted to say today. Thank you so much for popping into this virtual legality, and I will catch you on the next one, whenever that might be. Virtual Legality is a YouTube video series with audio podcast versions presented as commentary and for education and entertainment purposes only. It does not constitute legal advice and does not create an attorney-client relationship. If you have legal questions about the topics discussed, please consult your own legal counsel.